Hey guys, how's it going? It's Andy from MagooInvesting. Welcome back. In this video, I'm going to be talking about just kind of my year as a whole and talk about the 5 things that I learned about trading stocks this year. Once you get towards the end of the year, you're going to start seeing a lot of people talking about New Year's resolutions. And basically what they're doing is they're looking at their past year or past couple years and they're trying to talk about how they're going to improve themselves in the future. And I think that it's important to do that for stock trading as well. So I've kind of gone back and I've looked at my past year and a little bit of trading, and I kind of wrote down the 5 biggest lessons that I learned. And hopefully they're going to take me into 2020 with being a better trader. So I thought I'd share them because I've made a lot of mistakes, and kind of the main reason why I started this channel was so that I could tell people the mistakes that I've made, and hopefully people won't follow the same mistakes that I did and will make more money instead of losing 75% of your account in the first year. So with that being said, let's break it down with the 5 top lessons I learned from 2020. Actually, before we get started, I really appreciate if you guys hit that like and subscribe button, as it would help me out a lot. Also, I'm not a licensed financial advisor, and I'd highly recommend talking to a professional. Someone can find you the best places to put your money going forward. Now let's go to the top 5. All right, so number 1, also these aren't in any particular order. There's kind of the ones I thought of in order. The first one is don't try to predict the market. And so this is one of the main lessons that I've learned, and probably the one that has lost me the most money. I made a couple videos on this channel this summer talking about how I thought that it's very possible the stock market can continue to fall. And I was true to my word, and I put my money where my mouth was, and I started shorting the market. And so I did this last December as well, and I made a decent amount of money. Problem is, I was in a 3 times weighted ETF that follows the NASDAQ. So when the market went down 3%, I would go up 3%. So it was great. The problem was, I was shorting the market on December 26th of last year, which was the best single day in the stock market in the past 10 years. And so I was on the wrong side of that. So I lost 15% in one day because I tried to be cute and I tried to short the market. And so I thought I learned my lesson from that, and I promised never again I was going to go full short in the market. And then we got to this summer, and I made a video talking about how I was kind of in a holding pattern, how I had 50% long, 50% short. And then the Federal Reserve came out and said some things that spooked investors. And then Trump was tweeting stuff about the trade war, and I felt pretty confident the stock market was going to fall. So I sold my long positions and I went all short. And then the next day, Trump tweeted that they were making progress on the trade war. So kind of the thing that I learned from this is, on average, the stock market goes up between 7 and 10% every year. And so if you're going to be shorting the market and trying to be the guy that's predicting the downfall, your odds are not in your favor. And one of the things that I've learned investing this year is that when we're trying to be profitable in the long term, you have to be making the highest percentage plays that you can find. And shorting the market, you're putting yourself at more of a risk, considering the numbers are not in your favor. We've had the longest bull market in history, and I try to predict the end of it, and I was wrong. So that's tip number 1, or the thing I learned this year, is to not try to predict the stock market. All right, number 2 is don't let earnings be the reason that you sell. And so earnings have always kind of spooked me in the past. You get increased volatility, and it kind of seems like a coin flip. And I've talked a lot on this channel about how I don't like buying before earnings, just for the fact that, volatility goes up and it kind of feels like a coin flip. So you have no idea which direction the stock's going to go. And so the reason I learned this lesson is I was a big advocate for Tesla this summer. After they had back-to-back horrible earnings, I took a position in the stock and I felt very good about it. Problem was, once it started getting close to earnings, I was kind of worried the stock might fall after the past earnings that they've had. And I was too scared to hold through earnings, and I got burned because of it. I sold the day before earnings. They produced a profit, which is a shock to a lot of people, and the stock jumped 20%. And since then, I think it's up 40 or 50% since then. And I missed out on that profit. And so I talk on this channel about how it's important to take positions in stocks and companies that you trust and believe in. And so I believed in Tesla, but I got spooked before earnings and I paid the price. The reason I say that you got to pick a position and something that you trust, so that if the earnings do go poorly, you're not going to just immediately sell right after that. You believe that the stock can recover. And so I should have stuck with it, but I didn't, and I made that mistake, and hopefully I'll learn from it. So rule number 2, don't sell because of earnings, just because of that. Don't buy before earnings, because I think I stay by that one. But selling before earnings because you're worried, it either means that you're in a company that you don't trust, or it's probably a bad idea. So that's number 2. All right, number 3 is day trading isn't for everyone. And so I talked about this in my video yesterday, so if you missed that, I'll throw that up right here. Day trading is kind of a sexy profession. When people think of it, you think of, oh man, imagine just spending an hour on the computer in the morning and making a bunch of money and then just having nothing to do the rest of the day. You see pictures of people trading on the beach on some foreign country, and it looks like a great lifestyle. And so people get kind of drawn into it because of that. And so I got drawn into that totally. And I got very lucky at the beginning trading TLRY, which is the video from yesterday. And so I got kind of a false sense of security on how good I was trading. And so day trading is not for everyone. There's rules in place called the PDT, the pattern day trader rule, which means that if you have under $25,000 in your account, you're only allowed to have 3 trades or 3 day trades within a 5-day period. And so as a result, when I would be day trading, I would try to hold overnight just for the fact that I didn't want to use one of my day trades. And as a result, I bag held a lot of companies. And bag holding is when the stock falls and you're just kind of hoping that it's going to go back so you can break even, and the stock just continues to fall. And so as a result, I lost a lot of money. And so my experience day trading, I will never do that again. And I think it's very important for people to make mistakes in the stock market and learn from them. And so my time day trading is the whole reason why I started this channel, because I don't want people to make the same mistakes that I do. And so I like being very transparent on this channel. I've had a pretty good year. I'm green on the year. But when you go back to the 5-year on Robinhood, I'll put that up right now. It's kind of a doozy. That's when I tried day trading. I bag held and I lost 75% of my account just from day trading. So I've made that mistake. I'm never going to do that again. And that's number 3. Day trading isn't for everyone. Okay, number 4 is that I've honed in on my personal trading philosophy. And so if you go on YouTube and you search stock trading, or you just Google trading strategies, there's a million of them out there. I kind of think of it the same way as the fads for these diets. There's just so many new ones that pop up and they look great, and people talk about these incredible results that they've had and how easy it is. And I kind of got caught in that. And I think it's very important that you try out a bunch of different strategies before you find your own. And I tried pretty much everything. RSI, buying before earnings, unusual volume, pretty much everything. And I had some success with it. The problem was I wasn't super confident with the trades that I was taking. So I wouldn't let my winners run, and that's the problem. So I would take very risky positions that if I let them run to the upside, probably a good strategy. Problem is I didn't believe in the strategy enough to let them do that. So I would take very small profits and then take even larger losses. So over the course of this year, I've kind of honed in on my strategy. It's a 3-part strategy. Buying companies that you love and you trust, which I talked about already. Number 2 is they have to be at a discount because of bad earnings or bad news. And then number 3 is they have to stabilize, consolidate, and start pushing higher. And so the positions that I'm holding right now, Twitter is the prime example of that. They got hurt by bad earnings, they consolidated, and now I've taken a position in them. And so it's just, you got to be patient. And I think that learning your own trading strategy is part of maturing as an investor, as a trader. And I think it's a great step. And I hopefully have gotten to the point now where I've honed in on my own personal trading strategy. And number 5 is keeping it simple. And so when I first got into trading, as I've talked about, I was a day trader. I loved the idea of taking just large positions in a company, holding it for a couple hours and selling it. And after I kind of got away from that, I would start buying companies that I didn't even know anything about. I bought stuff in Crocs, Macy's, companies I didn't really care about. I kind of knew of them, but they had very attractive charts. And I specifically remember talking to one of my buddies that's a very safe investor, and he's like, "Why are you buying these stocks?" I was like, "Well, the charts look beautiful." The problem was I didn't believe in the company, so anytime things went south, I would cut losses very quickly, and same to the upside. I'm going to put on the chart right now when I traded Macy's from last year. I held this for I think 3 or 4 days, and I made a couple dollars, 1% on a very risky trade. And so that's not the type of risk reward we're looking for. 1% with a lot of stress and a lot of risk involved is not how you become a successful trader. So I tried to be too cute with my trades and tried to just scalp a couple of percents on random companies, and I paid the price a decent amount of times. And so I've kind of learned that buying companies that you believe in and kind of letting them ride for a decent amount of time is very profitable. And so one of the perfect examples of that is the Twitter. And so it looked like the perfect chart. And when I bought it, I kind of expected it to do pretty well right away. And so out of my 4 companies that I own, Twitter was doing the poorest. It was horizontal for a couple weeks, and I was up like 0.25% when some other things like PayPal and Starbucks were up between 5 and 10%. And I was like, what's going on? Like, I felt so good in this position. And in the past, I would have gotten bored with that stock and sold it. But I let it ride, and now it's my highest performing stock that I bought on that day. So it's just keeping it simple, making a plan, trading the plan, and not letting kind of boredom or horizontal movement get in the way of that. So that's the 5th and final thing that I learned from the stock market this year. So let me know what you thought about my list. Do you agree with them? Are there any ones that I said that you're like, I don't totally agree on that? And let me know if you've kind of honed in on your personal strategy or you're trying to still figure out the perfect trading strategy for your lifestyle. So let me know in the comment section down below. Thanks for watching. I appreciate the support, and I'll see you in the next video. Thanks for watching.